Okay, so here's something to think about. Bitcoin has survived regulatory bans, exchange collapses, and extreme volatility cycles. And yet this week, all anyone could talk about was its consolidation between $74,000 and $78,000.
That's a great point. It's like people forget the resilience of Bitcoin when the market gets noisy. But this week wasn't really about a breakdown, was it?
Not at all. This week was about consolidation, not crisis. And that's the distinction that often gets lost in the noise. Sure, we saw moments of selling pressure and brief spikes in volatility, but those were largely driven by external factors, macro headlines, ETF flow discussions, and broader uncertainty.
Right? And it's almost predictable at this point. Whenever there's macro uncertainty, whether it's inflation expectations, central bank commentary, or shifts in risk sentiment, Bitcoin reacts. But what's interesting is that the broader market structure hasn't broken down.
Exactly. On higher time frames, the structure remains intact. And that's what really matters. The $74,000 to $78,000 range has become a key short-term support level. And if Bitcoin holds above it, we could see a renewed attempt toward the $82,000 to $85,000 resistance region.
But if that support fails, the market might dip lower to search for liquidity before stabilizing. It's a reminder that short-term movements can be dramatic, but they don't necessarily define the long-term trajectory.
That's the key takeaway. Bitcoin rewards patience, not impulsive decisions. And this week, the Fear and Greed Index shifted closer to fear, which is always psychologically significant. When fear increases, emotional decision-making tends to follow.
It's fascinating how fear can create a feedback loop. Retail participants see others selling, so they sell too. It's almost like a chain reaction.
And that's where the opportunity lies. Historically, fear environments aren't where long-term trends end. They're where conviction is tested. Weeks like this are filters. They separate the emotional participants from the disciplined ones.
That's such an important point. It's easy to get caught up in the noise, but the real question isn't, where will Bitcoin be next week? It's, where do you believe Bitcoin will be in 5 years?
Exactly. That belief shapes your behavior today. Are you reacting to volatility, or are you positioning with structure?
And positioning with structure requires discipline. It's about understanding that Bitcoin doesn't reward impatience, it rewards time.
So true. And while the headlines focus on the short-term noise, the real story is in the quiet factors that continue to shape the market. Institutional flows, liquidity conditions, and adoption.
Those are the forces that often go unnoticed, but have a significant impact on the long-term trajectory. It's like the foundation of a building. It's not flashy, but it's essential.
And speaking of foundations, let's talk about the emotional aspect for a moment. The Fear and Greed Index is such a fascinating tool because it captures market sentiment in such a visceral way.
It really does. And when fear takes hold, it's almost like a self-fulfilling prophecy. People see others selling, so they sell too. And the cycle continues.
But here's the thing. Fear is also an opportunity. It's a test of your ability to stick to your strategy, even when the market feels uncertain.
That's why having a clear plan is so important. When you know your strategy, you're less likely to be swayed by short-term fluctuations.
And having a plan means understanding your time horizon. Are you trading for the next week? Or are you investing for the next decade?
That's the question every participant needs to answer for themselves. Because your time horizon shapes your approach to volatility.
It really does. And this week was a perfect example of why that perspective matters. Bitcoin's short-term movements can be dramatic, but its long-term trajectory is what ultimately defines its value.
And that brings us back to the idea of structure versus noise. Structure is quiet. It's the foundation that underpins everything. Noise is loud, but it's fleeting.
So true. And it's a reminder that patience is a virtue in this market. Bitcoin rewards those who can see beyond the immediate and focus on the bigger picture.
And that's the takeaway, isn't it? Weeks like this are not about predicting the next move. They're about staying grounded in your convictions and positioning yourself for the long term.
Exactly. And as we move into the weekend, it's a good time to reflect. Are you reacting to the noise or are you aligning with the structure?
It's a question worth pondering. Because in the end, Bitcoin doesn't just test your financial strategy, it tests your emotional resilience.
And that's what makes it such a fascinating market. It's not just about numbers on a screen, it's about psychology, discipline, and vision.
Well said. And with that, I think we've covered the essence of this week's market dynamics.
We have. So let's leave our listeners with this thought. Bitcoin rewards time, not impatience. Keep your eyes on the horizon and let the structure guide you through the noise.
Perfectly put. Until next time.